Welcome back. I've been trading crypto for 8 years and now I'm broke. Well, in today's video, we're going to be exploring the art of crypto trading. Not only the art of it, but the risks involved and my viewpoint now that I've been uploading on this channel since 2018, started learning about crypto a little bit before that. And now, we're multiple cycles in my journey, and I wanted to share some findings with you guys and talk about whether crypto trading is the right thing to do. And if not, where do we invest to really make money? Because everything that you can see on social media is screenshot after screenshot after screenshot of look how much I made, look how much leverage I used, look how much profit I had. But it's very rare that you actually see the other side where people are losing money. And I would go as far to say that a lot of these screenshotters, as we call them, who post these screenshots on social media are only showing you their positive moves in the market. But there's a very high likelihood that they've taken losses because at the end of the day, any trader who tells you that they haven't taken a loss is completely lying. And so in today's video, we're going to be talking about the journey of investing, not the destination, the journey. We're going to be talking about the difference between being rich and being wealthy. We're going to talk about where to invest, where to trade, where not to trade, what not to trade in. And we're also going to talk about indicators in the market that can help you identify whether you should be trading, holding long term, or doing both. This is the Cryptoviser podcast. We upload every single day since 2018 to bring you the latest happening in the financial world. Like I've been saying, I've been trading crypto the entire time I've had this channel. Some we've talked about on the channel, a lot we haven't, because there's so many complexities to this market and so many complexities to the entire ecosystem. And now that Wall Street is involved with Bitcoin treasury companies and Bitcoin ETFs, and Ethereum is now entering the game, and Solana and SWI and all of these other cryptos, we need to really understand where we are in the cycle. And the first part is understanding that investing, whether you're trading or investing for the longer term, this is a journey, not a destination. Now, one of the things I see on social media the most, especially with these quote unquote screenshotters, is the belief that you can get rich quick. And by the way, you can. It's just very unlikely. You'll hear about, well, this person bought Dogecoin and became a millionaire. This person bought, Shiba Inu and became a millionaire. And you're going to think, oh, well, I can do the same thing. These stories are very uncommon, okay? A lot of times it's a lot of capital. They're playing 100% of their portfolio or very large portions, and their risk appetite is very, very big. But the higher the risk, the higher the reward. But there's also, the higher the risk, the potential of not getting that reward at all, right? And so you have to be able to measure the risk and understanding that investing is a journey. Most people, think about this, most people who win the lottery are broke within a few years. Why? Well, because as soon as they won the lottery, they've already spent the money. And this is not the way smart money moves. This is the way that people who don't have access to the money don't know how to make money work for them. They just get a lot of money and they think they have to spend it because that's what they've always done. And it's very hard to even imagine somebody getting $4 or $5 million and then having nothing in a few years. But if you're not living at a $4 or $5 million level, and then you get that money and you're living at it, but that's all the money that you had, and you didn't do anything to make the money work for you, well, that's why you're going to have no money left. The same thing will happen in crypto. Like if you get a $1 million trade, a lot of people will put it right back in the market, and then they keep over trading. And each trade gets bigger and more riskier. This is exactly what happened to FTX. They were taking customer funds, and in the bull market, they were making a lot of money. But bull markets don't last forever. And when the bull market came down, they started doubling down to make those bets back. And the market went further down. And then they doubled down again. And then the market went down. It's the same thing like playing roulette and keep putting the money on black, and it keeps coming up red. You keep doubling down to make more, and you keep doubling down and losing it. Yes, the likelihood is that eventually red will come up, but it's not guaranteed. And that is why it is important to understand that investing is a journey, not a destination. Most people think, oh, if I get $5 million, I'll be good. But they don't even have a plan for it. So one of the big things that I've learned in the crypto space is that crypto is not the premier investment, right? I do believe in the thesis behind Bitcoin going up as the fiat and the dollars keep getting printed over the course of time and devaluing the dollar. Of course, that this is data, right? We know that this is occurring. But there are a lot of assets outside of Bitcoin and even outside of crypto that do much better. I mean, even if you just look at this cycle that I am in right now when I'm recording this video, if you look at the Circle, which is the stable coin issuer of USDC, Circle IPO'd at $30 and it went all the way up to $300, 10x in 1 week. 10x. By the way, that's more than Bitcoin has done the entire 2024 into 2025 cycle. Because remember, the cycle low when FTX collapsed was $15,500. We've only gone up about 8x from there to about $115,000, which is still a huge number. But percentage-wise, Circle was a better bet. You can also look at stocks like Bitcoin mining company stocks. We can look at TeraWulf. This probably is not the best example, but it went from 65 cents in 2023 to $7.18. That's more than 10x. Again, better performing than Bitcoin and definitely better performing than Ethereum, at least as of the date. Core Scientific came out of bankruptcy in the beginning of, I think, 2024. It went to a $4 valuation and went all the way up to basically $20, so a 5x. And by the way, if you held in the bankruptcy, it went even higher than this. And so there's definitely opportunity to make money outside of Bitcoin. This idea that Bitcoin is superior for trading, this is dumb because it's not based on actual data. One of the big learnings that I've had with investing for this long and trading and having long-term holds is focusing too much on one stock or one crypto. In my view, this is one of the easiest ways to lose in the market, right? Whether you're a Bitcoin maximalist, an Ethereum maximalist, a Cardano maximalist, an XRP army, right? It doesn't matter. Being solely focused on one crypto or one asset for that matter, right? We've had people who are MicroStrategy bulls. Their entire portfolio, they remortgaged their house, they took out their 401k, and they put it all into MicroStrategy, right? And what happens when this occurs is you get so emotionally invested in your trade that you're no longer actually trading. You're just becoming a fanboy, right? Where you're giving everything, but what you're getting back is very little. I mean, Michael Saylor, he is telling people, don't buy the MicroStrategy stock, buy the Bitcoin. And the executives, and by the way, he's not just saying this, he's doing it because he, from 2023 into 2024, he sold all his shares in the stock. Now he has more now because he gets compensated and he has convertible shares, but he had zero last year in 2024, 0 shares. The CEO, the founder of the company, 0 shares in his own company because he was selling the stock and buying Bitcoin himself. And that's what he's telling you to do. But there's a whole cohort of, MicroStrategy experts that keep buying and are most bullish on MicroStrategy, even though the market cap of MicroStrategy is significantly higher than their underlying Bitcoin holdings. They have about $65 billion in Bitcoin when I'm recording this video, and their market cap is $107 billion. Their underlying business is not worth double, and the Bitcoin that they're holding is not worth double. So there is a premium. And when there's a premium, this is a risk because not only is the market going to short that premium, but strategy is shorting it also because they keep selling more shares on the open market to buy more Bitcoin. And so MicroStrategy bulls say, well, this is bullish because they're going to buy more Bitcoin and that's going to push the price up. But that's not exactly what we've seen, as I just showed you. Bitcoin mining companies are performing better. a stable coin company performed better than MicroStrategy has performed in the last year. I mean, you could just look at MSTR. In the last 1 year, we have gone up, let's see, from where the lowest point to now, 220%, right? So basically a little bit like almost 2x, 2.5x. Meanwhile, the two companies that I just showed you, Circle and I think it was TeraWolf or Marathon Digital, one of those Bitcoin mining companies, I completely forgot already. They both did 10x. One in a week, one in a year. And so this is really important that you understand that when you become a maximalist, you lose sight of where the market is. And the other issue is, do you understand the full fundamentals of what you're investing in? Do you understand the tokenomics? Do you understand the inflation rate of these coins? Do you understand how many early investor coins are being unlocked? Who's the counterparty to you buying? Meaning, when you buy, who is selling? And when you're selling, who's buying? These are really important dynamics to take into place. And going back to what I was just saying, like if you focus too much on one particular stock, you miss everything else. If you're a Bitcoin maximalist and you say, well, Cryptoviser, nobody cares about nobody cares about a stable coin. I mean, again, compare the price or the value increase. I meant to type in Circle. Compare the price activity in 1 week from Circle, compare that to Bitcoin. Now you could say, well, this is a pump and dump, and maybe it is. But again, in a bull market, as a trader in the markets, we're not thinking long term. We're thinking short or medium term. We're thinking get in a trade moves up, we get out. If the trade moves down, well, you have to have a strategy for that too. But we're right now just talking about the prices going higher, right? And so a lot of people lose sight of this. And then they, by the way, enter a position without having an exit plan, which is kind of like what I was just talking about. So this is another big finding for me. And this is going to get us into this next part of the video, which is what is actual trading? What is being a market trader or a market speculator? What exactly does that mean? And by the way, if you're up to this point in the video, don't forget to hit subscribe. Sometimes we do deep dives into individual topics or individual cryptocurrencies to understand them a little bit more. And sometimes we talk about the macro zoomed out view of the financial markets to understand where we can position our portfolios to make the maximum possible return. Nothing I say is financial advice. These are my opinions, my analysis, and my own journey through the world of investing in crypto for 8 years. And so what is trading, right? Because I hear a lot of people say, I want to be a day trader. First of all, I've never actually met anybody or even heard from anybody who sits in front of the screen and just makes these micro trades every 5 minutes for the whole day, every single day. Because sometimes the markets are sideways trading and things are very boring and there's not really much to do. Sometimes you're waiting for better entry points or you're waiting for exit points. So the day trading concept, I think you guys have to rethink it, right? I don't think that the majority of people are actually trading on a daily basis, hour by hour. Some people may, and there are definitely bots that can do that. But I don't think this is like what people are doing, right? Whenever you enter a trade, you need to understand why you're entering the trade and when you're going to exit the trade. Because if you're entering a trade, you believe that the price is going to go higher. Or if you're shorting it, you think the price is going to go lower. But either way, you think that the price is going to go in one direction. But what happens if it doesn't? And or what happens if it does? When do you exit? Because if you enter a trade without an exit point, you're never going to exit. You're never going to realize that profit. You're never going to be able to roll that profit into the next trade. And therefore, you don't become a trader. You become a hodler. And hodlers, while there are a lot of hodlers out there, I would say the majority of hodlers, people who hold their coins and will not sell, it's because they're just greedy. Because then when we get in a bear market, they're pissed off and upset. But in the bull market, they were saying we're not at the top of the market, Cryptoviser. We're not at the top. But then at the bottom, they're saying, shoot, I should have sold. This is emotional trading. This is how people FOMO. And one of the indicators for me is that when I feel that I'm getting into FOMO, like I got to go buy this or I got to go sell this, that's where I typically stop. Like I don't do anything. And I really kind of say, okay, let's really think about this for a minute, see what my original thesis was and has it changed. You also have to understand the risk profile of the trade. So if we're looking at Bitcoin in particular, right? Bitcoin has not performed in the 10x, but it's very close to the 10x, 15,500 all the way up to 115,000. And so the risk that we are going higher, I think, is a higher risk than we're going lower at this particular point. Same thing with Circle. Circle going up 10x over the course of a week or a month. Yes, you could say the IPO was valued incorrectly, and that's true. But typically, what you're going to see is the early investors, whether they're IPO participants or people just on the open market, they're going to take profits at this level. And then we have to understand, well, when do Circle shares unlock for insiders, for early investors? And the answer is 6 months. So 6 months after the IPO, right, I would expect to see a downward move if the price is still this high at a 10x. There's people out there that will say, Cryptoviser, no way. It was a incorrectly valued, so there's no way we're going to go lower. Well, based on my risk analysis of this, that's just not the case. And the same thing that we can look at in cryptos in general, right? Why are you entering a particular trade? And by the way, I'm not telling you what to invest in at all. I'm just telling you examples of, if you chose this coin and did this, you did this, right? But really, I want you to forget about which coins we're talking about or which stocks, and just really think about the message about having an entry point and then also knowing what your exit strategy is, understanding the risk profile of that trade, and most importantly, the time horizon of the trade, right? You can have multiple different time horizons. You could say, I'm going to hold this Bitcoin for 5 years. I'm going to hold this Bitcoin for 1 year. Or say, I'm going to hold this Bitcoin till it goes up 20%. Then I'm going to sell it. Then I'm going to move on to the next trade. And again, it's never wrong to actually pull profits in the market, because you will never know where you are in the cycle until afterwards. So when we're looking at this is called the psychological indicator chart for market movements. And it shows you the course of a bull run or a spike in the market. And this could happen over the course of any length of time. Sometimes it takes a week, sometimes it takes a month, sometimes a year, sometimes even longer than that. But effectively, once you start to reach this top level, you have to understand what the signals are that you're getting towards the top. Number one, a 10x over a very short period of time. This should be an indicator. People who are extremely bullish online and saying that there's no risk, this is a risk-free trade. I mean, we've even heard that from MicroStrategy's Michael Saylor saying that Bitcoin will never have a bear market again, saying that Bitcoin cannot go much lower than where it is, saying that MicroStrategy will never sell their coins, that they'll continuing to buy whether we're in a bull market or bear market, that they can't get liquidated, they can't get margin called. While that may be true, we don't know that because we haven't been there just yet. And when you're in this top phase of the market cycle, you start to hear a lot of these things because the push of the price is higher, it will only last for so long. It's like, you go to your favorite restaurant, you haven't had a type of food for a while, or you go to your favorite country and you haven't been to your favorite, museum in a long time, right? You want to get there, but once you're there for a little bit, the excitement kind of ends, right? And then you start to get tired and then you're like, I got to go home, I got to go lay down, I got to go on a walk, or whatever the situation is. So when you first get to that restaurant and get to that museum, the feeling is very different from when you leave, right? And the same thing is in the market. When you first place a trade, you feel really confident about it. Then when you get towards the top, you start to change your emotion. You start to say, oh, you know what? We're good. We're going to keep going up. No problem here. Everything's great. We're very excited. But where's the new excitement? Where's the excitement that's going to get new players buying in or utilizing the technology or the crypto getting a narrative push? And so understanding where you are in the cycle is super important. Now, I'm not going to get too deep into the psychological chart on this video because we do talk about this on a lot of other videos as well. But again, this video is about, what I've learned from trading for 8 full years now. And by the way, I have trading and I have holding and I have both, right? So every every buy that I make in the market or sell that I make in the market is not necessarily a long-term trade. Sometimes it's a short-term trade, and sometimes it is a long-term trade. But understanding that the markets are going to move the way the markets are going to move. One of the biggest things that I've learned in these markets is the markets operate the way the markets want to operate. Just because you want the markets to go higher doesn't mean that is what they're going to do. You have to trade the market that's in front of you, not the market that you want. And this is very hard for maximalists because maximalists want their coin to go higher. And they lose track of everything else going on around them. They could see every other coin going higher and they'll say, oh, my coin's next, my coin's next. Maybe your coin will never be next, right? And so you can't be fully committed to any one asset or any one trade. This is why diversification is key, because if you have 10 different trades and one isn't working out, the other 9 are still there. And by the way, another learning that I've had was that learning about people who do trade these markets, a lot of them, they don't have like out of 10 trades, 8 or 9 of the trades are losses. You only need one good trade to make up for all the bad trades. And so to actually show you the math on that, let's say you have $10,000 and you want to invest this into 10 different cryptos. So each crypto gets $1,000 allocation. Now let's say 9 of those go to zero. So now you have a $1,000 of your original $10,000 investment. But let's say that single investment that didn't go to zero went up 20x. So you went from $1,000, 20x is now 20,000. So you lost 9,000 in your original investments, but you had that one trade that 20x'd and doubled your entire initial investment. So you wiped out all your losses and you still doubled your initial investment. Now, this is an example. It's not guaranteed that this is going to occur. But again, let's say 8 of those trades lost and 2 of those trades did a 20x. Well, you'd actually be double that. Actually, 10 times 10,000. Wait. You have $2,000, right? 2 trades at $1,000 each, both 20x'd. And you have $40,000. So your initial investment did a 4x, 300% profit, even though 8 of your trades lost. This is very important to understand because diversification is key. And also it allows you to exit losing positions much earlier, because if you're making 20x on a trade or 10x on a trade, you can exit a losing trade and say, you know what, I'm going to take this as a loss. I'm going to take this as a wash because I made the money here. And so understanding that it's not all or nothing, understanding that you're not going to win on every trade. One of the things that I learned through following traders is that a lot of traders can go for years and not make a penny in the markets. Now, it would be very hard to not make anything in the markets, but I'm saying losses versus gains can go years, but all it takes is one trade to change your life, right? And so you don't want to always just be chasing that one trade that's going to change your life, because it's like winning the lottery. Unless you see a sure thing in the markets, but then again, if you see the sure thing, Wall Street probably saw it way before you, right? So it's very hard to get ahead of these, but it is not impossible. We have talked about many different cryptos and stocks that had the potential to go up and run up extraordinarily high. And a lot of them did. I mean, even MicroStrategy did really well until everybody knew about it. That's the truth. I mean, look at what happened in 2020 when they first made the announcement about moving into the Bitcoin treasury thesis. I mean, we went from $14 all the way up to $103, and it kind of stabilized and then came down in the bear market. But then look at what happened in 2024. People are still saying, no, Cryptoviser, there's no bull market now. We're not at the top. It's like, wait. In 2023, we're at $16 on MicroStrategy. Now we're up 2,200%, almost 23 times. And so if you would have put $1,000 into MicroStrategy back in 2023, you would now have $23,000. If you put $10,000 into MicroStrategy, you'd have $230,000, right? 10x, about 10x. Am I doing that right? 20x, sorry. So yeah, there's definitely opportunity there. But Peter Brandt, who's a legendary trader, futures market trader, and he also does talk about crypto a lot on his X page. But he said every real honest trader I ever known, and having been a trader at the board of trade with the Commodities Corporation as a market wizard, he says he knows many market traders. They almost always find some aspect of disappointment with every trade they've ever done. In hindsight, he said he can nitpick 50 years of trades. The Z-gens that post screenshots of profits and who talk big on YouTube claiming to do no wrong. This is how we who have traded for a living know they are full of shit. And I agree. Majority of traders, like I said earlier in the video, will lose money in the markets. But it's not about the losses, it's about the wins, right? This is where you can't make every trade a risky trade. But you could have if you have 10 trades, you can maybe have 2 very risky trades, 5, mid-level risk trades, and then 2 to 3 low risk trades to really balance out their portfolio. This is just an example. But again, if there's a lot of people on YouTube and a lot of people on social media that post these screenshots of win and gains and gains and gains, you ask them, have they ever lost a trade? And they said, no. I spoke to a very wealthy investor recently who made money in many different types of investments. And they would always tell me when I would talk to them, like, how are you doing in the market? Oh, I'm doing great. My portfolio's up. I'm like, but you say that every single day. And they're like, yeah, my portfolio is always up. I'm like, yeah, but if you're talking about your investments that you made 20 years ago, yeah, clearly, I'm talking about the investments that you made in the last year or two. And obviously, I know that this investor is successful because they have things to prove it, right, from a monetary standpoint. But they still won't admit that they made losses. And that doesn't make sense. Like, you are not going to win every trade. And if you're trying to win every trade, you're going to start over trading the market and you're going to lose. That's one of the big findings that I've had in the last 8 or so years. And so where do you get info from, right? Well, I mean, I use aggregators of data, like some of the Token Terminal is a great one. DeFi Llama is a great one. You can find a lot of data on CoinMarketCap about the individual cryptos as well. I mean, there's so many different sites as well. I use Farsight Investors for the Bitcoin ETF flows and Ethereum ETF flows. But one of the big learnings that I've had with consuming information and data about these markets is there's a lot of bias, right? If you're on social media, the bulls are going to say, this is the best coin. This is the best coin. This has the best technology. Wow. Literally, there was a partnership between MasterCard and some crypto company recently. I forgot what it was. But I started seeing social media posts saying, by the way, the partnership had to do with MasterCard and a specific company. People were putting on social media, MasterCard has a partnership with Ripple, so keep an eye out on this because Ripple's going to be next. And it's like, the announcement had nothing to do with Ripple at all. And they're connecting because, well, MasterCard once talked with Brad Garlinghouse. Well, now there's going to be a partnership because they're choosing another blockchain. It's like, what? One has nothing to do with the other, like at all. We heard about Robinhood utilizing Arbitrum for their on-chain tokenization of real-world assets like stocks. And people were saying, well, you see, they're using Arbitrum, which means that Solana should be the number one crypto in the world. And it's like, what? Their announcement had nothing to do with Solana. And so there's a lot of bias on social media and also on Bloomberg, CNBC, Fox Business. These all have bias built in. Back in 2020, in the previous cycle, Sam Bankman-Fried was on CNBC and Bloomberg almost every day. And they were like, wow, he's such a genius. He's so smart. Meanwhile, they weren't asking him any questions like, how are you making all this money? What are you doing with the customer funds? Why don't you have a bit license? Like all of these very simple questions that they just didn't ask. They were just like, wow, Sam, you're so smart. You're such a genius, right? And so people listen to that and they invested in the platform. Here on my channel, I was warning my viewers, FTX is at the center of all this borrowing and lending. I would stay far away. Sure enough, I was right. So where do I get info? I get this question a lot. I have a blended perspective. I want to hear from the bulls and I want to hear from the bears. I want to hear from the bears more than I want to hear from the bulls because the bulls are always going to tell you why the price is going up, right? So with Bitcoin in particular, we know Wall Street loves it, store of value, fiat, we know all that stuff, right? So that nothing is new there and nothing is going to be new. It's not going to be like, oh, wow, Bitcoin is now only at 20 million coins. That means we have only 1 million left. That's a big announcement, so the price should go up. No. Everything that's bullish about Bitcoin, we already know. But what's bearish about Bitcoin? What's bearish about MicroStrategy? What's bearish about the Bitcoin ETFs? That is what I want to know. I want to know how they're raising money, how they're creating debt, how the market is responding to this debt issuance. That's what I want to hear. Because these are the indicators, the counter indicators to the bullish thesis are the bearish thesis. So I have to hear the bulls, I have to hear the bears, and I have to hear the middle. And this is where I follow people like Peter Brandt. He's been in the field for 50 years as a trader. Does that mean that he knows everything about crypto and he's going to have every correct call? No. But I'm following his thesis and his thought process on these markets because to me, I don't know. I mean, if I'm just going off social media, yeah, all the screenshots that I see, even from big accounts, it's all just like, oh, I made 300% in 5 minutes. You can do the same thing. It's like, no, you can't. No, you can't. You're going to lose your money. They just want the referral because then they get a percentage of your trade. That's all they want, right? So you're not going to get that from those screenshotters. You're going to get that information from a boomer like Peter Brandt, who he's not bearish on crypto, but he likes to tell things how it is when it comes to the market. And so you have to listen to both sides. That's how I get a lot of info from social media. So if I see a very bullish thesis, I will go and look for the counter argument and see what makes sense. Like for example, this user, Leshka, I've posted her in previous videos. She said, I've been in crypto, or maybe it's a he. I don't know. It looks like she. Anyway, I've been in crypto for 5 years, weathered 3 market cycles, secured a good bag along the way. Every major top came with obvious warning signs if you were paying attention. Now those red flags are nowhere to be seen. The translation, the most explosive alt season is still on the horizon. Now, Leshka in this specific post is talking about alt season. And so when I think about my thesis of where we are in the second half of 2025, I think that we're getting towards or at the top of the Bitcoin market, right? But altcoins haven't performed for over a year now, right? Almost a year and a half, almost 2 years. And so will we see a final alt season? I think Leshka is correct that there isn't a lot of top indicators in altcoins, but that's because the whole focus has been on Bitcoin, right? And so when I start to see Ethereum ETFs starting to pick up steam, more and more inflows, when I'm starting to see companies like SharpLink moving to Ethereum, even Tom Lee is now becoming an Ethereum maximalist. And he's now the board of director chairman for this publicly traded company called BitMine, which is going to become or it's already become an Ethereum treasury company. And so when I see things like this, and the whole narrative has just been about focus on Bitcoin for the most part, for the last year or 2 years. The bulls, the bears, everybody's just been focusing on Bitcoin, MicroStrategy, Bitcoin ETFs, other Bitcoin treasury companies. And then I'm like, wait, but there's the whole rest of the market here. So if everybody's bullish on Bitcoin, and I think that we're at the top of the market, once other people start to feel that we're at the top of the market, what are they going to do? Are they just going to pull their money out and move to stocks or keep it in cash? No, they're going to move. They're going to rotate into altcoins, into Ethereum, into the next best thing. This happens in every market. And so one of the big learnings that I've had is not only where I'm getting my info from, but putting it together in a cohesive thesis to understand Bitcoin's going to go up for a certain amount of time, but then it's going to come down. It works like a roller coaster. Look at what happened in the previous cycle. We went up in 2021, we came down, we went up at the end of 2021, and then we came down for 2 years. We had a bear market. A lot of this was because of over leverage. A lot of this because of over euphoria. A lot of money that was being spent on buying Bitcoin at all-time record highs, right? These were all indicators of where we were at the top of the market. Well, we're getting a lot of those same indicators now. But as we have learned through the 8 years that I've been on this channel and trading, is that the market, the money doesn't disappear, right? If Bitcoin comes down 50%, that means that the market cap came down by about $1 trillion. The $1 trillion didn't just disappear. It just moved. People moved it into other cryptos. People moved it into stable coins. People moved it into dollars or other fiat currencies. The money just moved. And so when the money starts moving and it's moving into other currencies, and we're getting this narrative on Ethereum, these are indicators the market is rotating. And so as an investor, as a trader, you want to be ahead of all of this, because here's kind of how it plays out. You start to hear the rumblings and rumors, right? This is where you hear buy the rumor, sell the news. Then they make the announcement, right? Tom Lee comes out and says that they're going to be essentially front running the banks, because he's saying that the banks are going to use DeFi. And so DeFi is built on Ethereum. So they're going to be using Ethereum and they're going to buy up Ethereum, whether it's now or in 5 years or 10 years. So he's trying to front run that. So to me, I want to front run that also, but is it the right time to do it? And so this is where you have to take into all of the data that you've been learning over the last 6 months, year, 2 years, and say, okay, we think we're at the top of the Bitcoin bull market. We're getting a lot of signals about that. Are we going to see a rotation, or are we going into a bear market? A bear market would probably be a macro bear market for all of cryptos. But if I don't think that we're going into a bear market, we're probably going to see a rotation. So where's the rotation going to go? Well, Ethereum. These Ethereum thesis and strategy companies, the ones that are going to be buying the same as Bitcoin. But you could also look at it as, if I'm bullish on all of this rotation, that means I'm technically bearish on Bitcoin. Not permanently, but temporarily. And so this is how market rotations operate. This is how you can make money during these periods of exit liquidity. Because in a bear market, there's no exit liquidity. If you have, let's say, 100 Bitcoin, which probably nobody on this channel does have, but if you did, wow, congrats. 100 Bitcoin would be what? $10 million just in Bitcoin. And so if you had 100 Bitcoin, and you're going to sell that in a bear market, there's a potential that it will push the price down significantly during that sale because there's no liquidity. But when you have Wall Street buying and buying and buying, and MicroStrategy buying and buying and buying and taking out debt to buy, that's exit liquidity. If you don't sell in that, somebody else will. And once that exit liquidity dries up, you can't sell and you won't be in profit. And so understanding the market rotations is also very important. The other thing that I think is one of the biggest learnings that I've had is not just having a strategy, but making sure you don't FOMO. And it's FOMOing in the market and also FOMOing out. There's a lot of people who think like at $108,000 Bitcoin or whatever the price is, I'm just using this because it's on the screen, where they'll say, well, if I sell at $108,000 and we go to 115 or 120,000, I missed out. But did you really miss out? Especially if you bought at 15,500. If you bought at 50,000, you doubled your investment. Pulling profit is never a bad thing, because I would rather pull profit than be in a loss. So you cannot look at a trade once it's closed. Once you close the trade, move on. Never look back, because the minute that you look back and say, damn, I shouldn't have sold, that's where you start to FOMO, where the price will dip a little bit or start moving higher, and then you buy higher than where you sold because you think that we're going to 200,000, which from 100,000 to 200,000 is just a 100% increase, which in crypto you can pretty much get in any crypto. And so is there other opportunities in other cryptos where the likelihood of doubling or tripling or quadrupling is significantly higher than where Bitcoin is. And so you have to not trade with FOMO. Buying when a narrative, I wrote this in my notes, buying when the narrative already hits, selling in panic, those two things are how you lose. So once you hear the narrative, right, everybody's talking about, like, I'll give you, for instance, we know about MicroStrategy. We know about 21 Capital. We know about all these other Bitcoin treasury companies. Well, now the last one from when I'm recording this video is Anthony Pompliano is going to be acquiring ProCap, or ProCap is going to be acquiring them, and they're going to be buying Bitcoin. They're literally the last one that's doing this after many other companies. And so in my view, this is a FOMO move. The narrative about these Bitcoin treasury companies already has hit. And so copycats just spread the diversity, the diversification of the risk, but it doesn't eliminate the risk. But also selling in panic is also an issue, right? Because there is a potential, if we've already hit the top, once you start the downward trend in the market, it accelerates very rapidly. You can see that from the previous cycles, right? We went from the top of the market, 67,000 in the previous cycle. That was in November, to the bottom of the market 1 year later. 1 year. And during this year, everybody thought the market was going to keep spiking. They were like, no, this is the final dip. We're going to pump after this. We're going to pump after this. But we just kept dipping because the macro was the bear market. So make sure that you get in before the narrative hits and you get out before the narrative shifts. That's pretty much the easiest way to look at it. Now, I put some notes to the side, but before we go there, I have this. You're going to hear a lot of this. Like Raoul Pal believes that there's going to be a super cycle that's going to push us all the way into Q1 of 2026. Whether that happens or not, I don't know. But these are kind of things that you have to look at with some skepticism, right? Because this is a billionaire telling you when the market's going to end, the bull market's going to end. And so if you're a billionaire and you believe the bull market's going to end by Q1 of 2026, what are you going to do? You're going to sell before that. But most people who watch this and listen to Raoul Pal will wait. They'll wait. They're waiting for Raoul Pal to tell you that he sold his coins, which he historically does tell you, not directly. He says, I'm no longer in this coin, I'm in this coin. And he probably tells us much later than when he does that move. And so this is where you have to formulate your own thesis and not just listen to other people. Because if you guys remember the stock to flow model from the 2020 and 2021 cycle, this was a very big learning for me, and I think many of you as well, where Plan B on Twitter was saying for the whole cycle, and Raoul Pal was parroting it also, that the stock to flow model was showing that we're going higher, that we're going to hit 200, 400,000 in the previous cycle. And the stock to flow model failed completely. And the top of the market was before the stock to flow model showed. And now everything that Plan B is posting is showing us more and more bearish charts that he reads as a bullish chart. So you have to be very, very cautious where you get your information from, because the info that you're consuming is going to help you formulate your thesis. And if you're not understanding where we are in the cycle and how the cycles work and understanding the macro picture, and you're only listening to the bulls, you're going to miss potential indicators that show you we're no longer in the bull market. And so I wrote in my notes, for newbies or newer investors, right, that you have to dedicate a lot of time and energy into researching and learning about these cryptos. You can't just look at the market charts and say, well, this one is under $1, let me invest in it. Now, granted, there's going to be a lot of people who do that, and there's going to be a lot of people who counter trade that. But you have to do a lot of research. This is not a freebie, but if you want money, you're going to do the research. Just like if you want money, you go to work. You don't want money, you don't go to work. So if you want to make money in these markets, you have to do research. And you can't outsource your research to other people. You can have them do most of the legwork, like Peter Brandt, 50 years of experience. But you have to be able to go and analyze what Peter's saying, Analyze what Plan B is saying. Analyze what Raoul Pal's saying. Analyze what Michael Saylor's saying. Analyze what Tom Lee is saying, and put all of that together to formulate a thesis. It will not come easy, but the get rich quick stuff is BS, especially now that Wall Street is involved. Wall Street is not here to make you rich, period. They're there to make themselves rich. And they have a much longer time horizon than many of us. So you have to keep that in mind as well. You have to change your mindset. Watch YouTube, watch my videos, watch Minority Mindset, Alex Hormozy, right? This changes the way that you view how you're making money, how hard you're working, what you're listening to from other people, whether their opinions will matter or not, right? Because I know a lot of people, they'll say, Cryptoviser, I'm not investing in this. I'm like, why? Well, I heard that Bitcoin is very risky. Well, who told you that? Oh, my coworker. I'm like, okay, well, your coworker, how much money do they have in investments? Well, I don't know. Are they an investor? Well, I don't know. Are they working at the job? Yes. Is their spouse working a job? Yes. So you're listening to them versus somebody who's made money in these markets for many, many years, like Peter Brand, like Raoul Pal, like Tom Lee. These are the people, regardless if you think they're right or wrong, that have the experience to understand how these markets operate. They may not have the timing correct. They may not have the assets correct. They may not have the pricing correct, but they know how the markets work. And so that's really important to understand, right? Going back to lotto winners typically lose their money within 5 years because they don't change their mindset. So you need to change your mindset. And honestly, getting rich quick is not a good thing because most people go broke. Getting rich slower so that you're learning about money as you're growing it and learning about how you can use your money to make more money is super important. I also wrote on my notes to keep learning and don't quit, right? Don't put all your money in one trade, especially when you first start. You're going to have losses. This is one of the hardest learnings of being a trader in the markets, whether you're a long-term trader, short-term trader, swing trader, day trader, whatever it is. Nobody wants to take a loss, right? But you have to. And I personally think you should take a few losses when you first start. So you learn not to jump in, not to FOMO in, not to just buy something based on what it is. That will teach you by taking those losses, right? And don't lose sight of what is important, right? Just because you're investing doesn't mean your friends and family should be investing. So focus on your wealth building, and that's it. Don't share it with other people. Don't try to convince anybody, because if somebody wants to invest, they're going to invest. If they don't want to invest, they don't invest. There's a lot of people that I know that know kind of the research that I do here on the channel with cryptos, and they literally, every cycle so far, at the top of the market, they call me, Cryptoviser, I want to buy Shiba Inu coin, or I want to buy this coin, should I buy it? And I can't answer that question anymore because they're always calling me at the top of the market. And so the answer to that is no, right? They shouldn't be, but I can't, like, if they think that's the right time for them to start investing, that's for them to decide, right? Because if you say no, and then the price goes up, they're going to blame you for saying don't invest. And this is with friends and family, coworkers, like that's kind of the way that it happens. And so other people, they will invest when they're ready to invest. I mean, you could definitely talk to people about it, the importance of investing. But if you're trading the market and they're not trading the market and they see the market going higher and you're constantly talking about it, there's definitely resentments that can be built. I've heard from people who have literally like just lost friends because of markets and what the markets have done. And one person doesn't take the profits and the other person does. And now their lives are completely different, right? Because somebody is living a little bit nicer than the other one because they did take profits, they did invest. And so you guys have to keep that in mind as well, especially in this crypto market. I mean, think about what happened during the previous cycle. Even your favorite YouTubers were telling people, use FTX, buy Terra Luna, use BlockFi, use Celsius. And those were YouTubers. Imagine that happened to your family. And by the way, like a lot of YouTubers, their friends and family were investing in that stuff too. And all those companies went down and people lost all their money. So that's really important as well. But focus on gradually changing the mindset while the wealth increases so you can keep it. Because as I've said in previous cycles, and I'm going to say it again now, most people who are in the green currently, they won't be in the green within a year. Because we're in a bull market. Within a year, we probably won't be in a bull market, right? We're going to transition to a bear market at some point. Then we'll transition into a bull market after that. But there will be a lot of people in 2021, there were a lot of people who were paper millionaires, or even they realized their millions, right? And they sold. And then they retraded, and then they overtraded, and they lost everything. And they went into the negative. I mean, I've read stories about people making, $20 million. And in 1 year, all of it gone. And they actually owe because they owe taxes on it. And they lost all their money because they retraded. So in 8 years of trading and having this channel on YouTube, what I can say is the crypto markets are not that much different from the traditional financial markets. The psychology of the markets is the same. The bull and bear markets are the same. The pump and dumping is the same. The irrational exuberance in some of these stocks are the same. And in fact, this cycle, very similar to the previous cycle, there is the potential to make more money in crypto derivative stocks than actually in the crypto itself, because there's more money currently in the stock market and there's more capital allocation to stock market specific products like the ETFs, like MicroStrategy, like Circle, like the Bitcoin mining companies, all of the above. And crypto, there's still friction in institutions getting involved, institutions custodying, institutions buying directly. And that friction is going to cause most of the money to stay in the capital markets. This is where you're seeing all the money pumping into the MicroStrategies, the Sharp Links of the world, the Bitmines of the world that are going to be buying Ethereum because they want exposure to the actual asset without holding the asset directly because they don't want the risk. And again, it goes right back to the risk reward. They want the reward, but they want lower risk. And that is exactly what these companies are doing and providing for Wall Street. Exposure to crypto within the regulated stock markets and high capital efficient stock markets. And so you cannot compete with them. We cannot compete with them. They have billions and billions and billions that they could deploy on a weekly basis. A lot of people, like everyday people, are tapped out already, living paycheck to paycheck or very close to it. So we cannot compete with the Wall Streets of the world. So we have to look at what Wall Street is doing, how the money is flowing, and then formulate a strategy to get there. But what I will leave you guys with is if you have $10 million, you may feel rich. You may not feel rich, but you are wealthy. If you make $150,000 a year, you may feel rich, but you're not wealthy. There's a very big difference, but there's also a very close line, right? Like somebody who has $1 million, they can do a lot for the rest of their life on that. Whereas somebody who has 100,000, they can't. And the 100,000 to $1 million, it seems very far, but it's very close. And so you can make it to that, but you have to have a thesis, you have to have a strategy, you have to have a plan, and you have to have losses, right? You're not going to get to that goal, whatever the number is, just overnight. It could happen, but most of the time when it happens that way, it's lost immediately. So it's better to make it over the course of time and slowly increase your wealth, slowly increase your mindset, slowly increase your understanding of the markets. That will make you an effective trader. But whether you trade day, week, month, or long term, it doesn't matter because the strategy should be the same. Don't FOMO, go into it with a level head, get out if needed, and don't risk more than you can afford to lose. And with that, hopefully you guys learned a little bit of something from this video and my experience in the markets in the last 8 years. I would love to hear what you guys think about your time in crypto or just traditional markets. Do you agree with me that there is more money to be made in potential these proxy stocks to crypto than the actual crypto directly? Don't forget to hit subscribe, give the video a free thumbs up. Let me know your comments down below and some of your biggest learnings from trading the market down below in the comments. And I'll see you guys on the next video. Invest responsibly, do your own research, and as I always say, crypto on.